All right, so now we're going to deal with utilities, as utilities will be found on either your bank statement or your credit card statement, and we need to know how to treat this specifically. So we're going to make this as realistic as we possibly can. So let's say that you've already received your last utility bill, and it covered something like the period from May the 18th until June the 17th. It's now June the 30th. Here's the issue. You don't yet know what you've used from June the 18th until June the 30th because the next bill hasn't arrived. It will arrive in July, but you need to know now, because it's month end, what to record for your utilities expense. But you've clearly used electricity every day, so the question becomes, what do you record at month end? So let's bring back the framework. We have our economic value timeline, usage happens daily, and then we have our settlement timeline, billing happens later. At June the 30th, usage has occurred, but the bill has not arrived. So this is the definition of an accrued expense. Now here's the challenge. You don't know the exact number, but you still need to record something. So we ask, what's a reasonable estimate of what I've used? So you use your last bill as a reference. Let's say that the last bill was $300. You've covered 30 days. That gives you $10 per day. Now apply it to the current period. June the 18th to June the 30th represents 13 days. So you'll have 13 times the daily rate of $10, which equals 130. That's your estimate. At June the 30th, you record a debit to your utilities expense for $130, and you're going to credit your accrued utilities payable for $130. You are recognizing that the expense has occurred, payment hasn't happened, and the exact amount is unknown. Now the next bill arrives. Let's say the actual amount for that period is $145. You estimated $130, and so there's a difference of $15. You now adjust by debiting utilities expense for $15 and crediting the accrued utilities payable by $15. Now your records match reality, and this is the beginning of reconciliation. Now, it could be the case that your estimate was higher than the actual amount, in which case the transaction would just be the opposite. So you would debit the accrued utilities payable account and you would credit the utilities expense account. When you eventually pay the bill, you're going to debit your accounts payable and you're going to credit cash. There's still no new expense because the expense was already estimated and then adjusted. So let's connect this back to your phone bill. With your phone bill, the amount is stable and you allocate it across periods. Because it's based on the dollar amount for the bill and not based on your usage, you can just use that as stable dollar amount. With utilities, the amount varies. You have to estimate first and then you adjust. It's the same framework of accrual expenses, but it's a different level of uncertainty, and that's the difference between the two. So to recap, here's the full process. You start with your last known information. You estimate current usage, you record at month end, and then you adjust when the actual next bill arrives that covers that period that you had to originally estimate. This is how real-world accounting works. So in closing, at month end, you don't wait for perfect information. You ask what has actually happened. And then you estimate, you record, you refine. And now you know how to account for the transactions and analyze the transaction related to utility expense and your cell phone bill.